Hello everyone and welcome to ICM's midday session. Many economic indicators came out in the European session and we're still waiting for more ahead of the US session. So first we had the German industrial production which rose by 0.9% in November, better than expectations of 0.7%. The trade balance came a bit softer at 16.4 surplus versus expectation of 18, but still a good reading. And the unemployment rate in the Eurozone dropped to 8.3 from 8.5 from 8.4 previously, beating 8.5% expectation. Now, ahead of the US session, we have the jobs report from the United States. There are expectations that the US economy was able to create 71,000 jobs in December. Unemployment rate ticked higher to 6.8 from 6.7%. While moving to Canada, also expectations that the economy lost 27,000 jobs and the unemployment rate rose to 8.6%. So these are the expectations for the jobs report from Canada and the United States. Now let's move to the charts and the market. The euro dollar is dropping on the day. The dollar is strengthening across the euro against the euro. We were just highlighting previously this big channel, so we're just gonna go to the hourly chart. This was the channel that we were monitoring for a while, and we had the break below the channel. So you can see we had yesterday also a smaller one on Wednesday. We were talking about a smaller channel, which was highlighting the move, and then you can see how the market 1, 2, 3, 4, 5, and then we had this consolidation ahead of the channel, drop towards the bottom of the second channel, and then we're able to break lower. Currently we're at the bottom of the channel. However, this is just a certain pattern. This will just be confirmed with the jobs report. So definitely the jobs report will affect the dollar, and the move will be based on the jobs report. It's either if the dollar is going to strengthen, we could just be dropping towards 21.30, which was a key area previously. However, a weaker dollar, a softer jobs report could just drive prices lower. What you can do in terms of expectations, you can just draw a line combining the previous two tops and just set a parallel target, and you can see how we are currently trading at the bottom of this channel. So you can draw it by this way, just the top, bottom, top, and then the bottom was exactly at this point. So this is just also another way, so you can just suspect where the market could be going if you just have key extremities that you are trading at. So this is a possible support that's holding for a while, 122. So on a strengthening dollar, we could be dropping towards 21.30, while if the dollar weakened, we could be just moving back higher again above 22.70, 22.80. The British pound against the United States dollar, we're still consolidating inside the same range. We highlighted earlier this week the 135.40, 135.50 area, and the top, the previous top of 36.20. We had the breach here, but then most of the time we're trading inside this range. So you can just highlight the top at 137.10, almost at the bottom at 135.26, and just trade the breakout on a directional move. The dollar against the Japanese yen, we had some bullish movement. So following this first break, we had a break and then correction, then a move higher. Then we had this resistance area here that we're currently trading at. So you can just highlight as the trend line combining these previous tops. So watch out for any continuation on a strong dollar. We could be rising towards 104.59, 104.70, which was previously key area. So between these two key levels, we could be just heading on a stronger dollar, while on a weaker dollar, we could be dropping again towards 103.20. The US dollar against the Canadian dollar, the US dollar against the Swiss franc, we're having a bounce back finally, and a bit of a correction. We talked about this earlier, so a move above 88.20 could just be a bit bullish for the dollar, and we could be seeing another correction. So you can just draw this trend line combining the previous tops, and also you can just draw another horizontal line. So the resistance could be somewhere here between 88.90 and 89.40. So this area here, watch out for some selling orders. Maybe on a stronger dollar, we could be visiting this area, while if the dollar weakened, 88.20 is just another target to be retested. The Australian dollar against the United States dollar is stronger relative to euro and Japanese yen and Swiss franc, but still below the previous top. So you can just highlight this key level here the previous bottom, which was previously also a top. So 77.20, 88, 78.20, 77.20. So this is the area that we're currently trading at. A break above the top, we could be just rising towards 79, while a drop here below 77.20 could just drive us lower towards 76.40, a previous top and a key level. The New Zealand dollar against the United States dollar, similar formation. You can just highlight the top, support, and just see how the 100-hour exponential moving average is giving support. So a drop below the 100-hour could just drive prices lower towards the 200. You can also draw this trend line combining the bottoms, which is currently coinciding also with the 200-hour exponential moving average. So a drop below 72.30 could just drive prices lower towards 71.50, 71.60 area. The US dollar against the Canadian dollar, still trading sideways, still below the trend lines. Again, just rely on this trend line. A break above this trend line could just lead to a bigger correction on the pair. And firstly, we could be visiting 27.90, 28.40 as support, as resistance, while for key levels we highlighted previously the bottoms. Could be somewhere here between 25.20 and 24.90 on the longer run. Moving to gold, which had a sharp drop in the morning, and many people, many traders were just disappointed with the move. However, if you're just following what we've been doing on the chart, we had this key trend line where the market. I'm just gonna explain all the structure that took place here. You can see here we had almost a triple top formation with rising highs and divergence. And then we had this break lower towards the trend line exactly. Then we had a bounce from the trend line to the upside, having a bit of a correction. Then we moved lower. Where was the target? You can just go to the extreme tops and bottoms, similar to what we've done with the euro, and then you're gonna get the result 1, 2, 3, and 4 exactly at this point. So this is just how the level was detected. 1875 continues to be a key area. Definitely gold traders, they're waiting for the jobs report. A weaker report could just mean further stimulus, further spending, and this could drive prices higher. However, a strong report could just weigh on gold prices again. Silver, almost same formation. We had this trend line, and then on the break of the trend line also we bounced lower towards the first support, previous support area ahead of the rally to the upside. Further downside could just trigger a bigger correction towards 25, while a return here, definitely we could be paying a visit to 26.80 first. This is just an interim resistance could be, and then we could be rising back towards 27.40 for silver. The WTI, it's still a bit valid, holding these three trend lines, and then we had another formation to draw the tops by drawing 1, 2, and 3. We have the top that we're currently trading at. It's still a bit bullish, but you can see the trading is narrowing a little bit here. So watch out for any key breaks in oil. It's not a valid trend line, but similar. It's just giving a steep move, and then we're having this consolidation sideways here. So watch out definitely for any break back below the previous top. So move back first below the first interim 50 level, and then moving back below 49.40 could just be bearish again for oil. As long as we're above it, we could be moving higher towards further highs. 52.20 could be a possible target for oil. The Dow Jones, we're having a bit of a move to the downside. Currently, you can just a bit of a correction. You can just draw a trend line combining the previous bottoms, and another one combining the top, so you can have almost an equidistant channel that we're currently trading at following this short move. So watch out for how this will come and play. A break to the downside and a drop back below 31,000 could just lead to a bigger correction towards the first target, 30,800, and then a bigger correction towards 30,600, while as long as we're above it, we could be retesting the high of 31,250 and then 30,000, 1,400. You can just 31,400. You can just draw extend the line to have just possible targets to the upside, where in the coming hours could be 31,400. So this is all for today's session. I'd just like to remind you that all the information